We are falling behind other major economies like US and China. There is this sense of urgency. The devil is often in detail. There is some catching up to do, and we need to have a strong focus on competitiveness of European economy.
What will it take to turn European economies around? Is it more defense spending, less bureaucracy, or lower taxes? Could it be the growing private investment now coming in from places like the US? And with the growth of populism across the continent, how much time does the EU have to get it right? All questions for Valdis Dombrovskis. He's the EU's Commissioner for the Economy. I caught up with him recently on the sidelines of the Berlin Global Dialogue. That's a kind of ideas conference for political and business leaders. Take a look. I want to start with the economy itself in the EU. Right now, for this year, for next year, we're looking at growth projections of just over 1%, maybe picking up a little bit once defense spending from member states really kicks in. How do you assess the economy right now?
Well, all in all, European economy is proving resilient in a face of consecutive economic shocks we are facing, and yes, we do have moderate economic growth rates, but those economic growth continues, and we expect it to pick up somewhat stronger next year. But at the same time, we also have to acknowledge that we are having structural problems in European economy in terms of productivity growth. Already for 2 decades, we are falling behind other major economies like US and China. So there is some catching up to do, and we need to have a strong focus on competitiveness of European economy, and that's why it's also one of the 2 overarching priorities for the European Commission for this political cycle, to strengthen the competitiveness of economy.
That sounds to me like defense spending alone is not going to save European economies. Is that fair to say?
Well, that maybe to put it in a bit broader context, if you look at the 2 main policy priorities for the EU for this mandate, it's competitiveness and it's security and defense, for obvious geopolitical reasons. So defense spending certainly will be increasing rapidly, and we provided also more fiscal space for this, which member states, including Germany, are using. But that is only one factor. If you look at the competitiveness factors, there are many important factors we need to deal with. First, it's a question on innovation gap. We are just spending less relative to our economy on research and innovation as other major economies. So this innovation gap to be closed. We do have relatively high energy prices, so we need to work on more affordable energy prices, especially for our heavy industries. We need to deal with administrative burden to reduce administrative costs, to reduce bureaucracy. So there are many different things we need to deal, including also removing the barriers for the single market, so that companies can actually scale across the European single market, and they don't need to move to US or Asia to do so. Therefore, there are a number of things which we need to do if we want to sustain our economic growth and to sustain our prosperity.
I want to touch on competitiveness in just a moment, but first I want to ask, more spending requirements through defense as well as low growth means more deficits. And right now the poster child for that is France. How do you feel about how they're progressing in terms of their budget goals of reducing that deficit to European standards by 2029? Are they on the right path, or are there warning signs ahead?
We know that the budget in France is still under discussions, and we need to see the outcome of those discussions. In any case, as regards this year's budget, it appears to be broadly on track. On the next year's budget, the way government has submitted it to the parliament is also, I would say, broadly in line with the medium-term fiscal structural plan France has. But there are important new developments, including the suspension of the pensions reform, or at least discussions on this, which have also substantial fiscal implications. So the question it will be how those fiscal implications will be compensated. And we are in touch with French authorities. Myself, I had some conversations with a finance minister on this and the importance for France to obviously follow its fiscal commitments, but also to ensure fiscal sustainability in a broader sense.
France says that next year it's going to reduce its budget already to 4.7%. Outside forecasters say that's not going to happen. At what point does the Commission say this path to 3%, maximum 3% deficits by 2029, it's not going to happen? At what point do you see that it's not possible?
Well, actually, also the new French government has reconfirmed the commitment to actually have the budget deficit below 3% of GDP by 2029. And indeed, as you said, the budget submitted to the parliament foresees a deficit of 4.7% of GDP. There are indeed discussions, and we'll have to see how close to 4.7% of GDP it will stay after those parliamentary discussions. But as a European Commission, we will be providing formal assessment on France's draft budgetary plan and fiscal trajectory more broadly in a context of European semester autumn package, which we foresee towards end of November.
You've been talking a lot about competitiveness. That's one of your two focal points you said for this session. When you look at Europe, do you see the need for more European champions, that there needs to be more business consolidation in certain strategic sectors? Is it now incumbent upon the EU to really identify and to help businesses consolidate, essentially?
Indeed, that's one of the area which we are looking, that how businesses are actually reaching the scale. So it's not a question just of the competition within the EU, even though that's also important. We want a competitive market. We want value for money for our consumers. But obviously how European businesses are competing internationally, where they have, major companies in US and China, elsewhere, to compete against, and that requires scale. And so we are currently working, and clearly this direction of the work is more towards European champions, but we cannot completely forget also this question of competition, fair competition within the single market, and value for money for consumers in the single market.
That's often stood in the way is your counterpart at the competition side for the EU Commission, ensuring that there's no unfair competition.
Exactly.
Do you see any tweaks if you work together to try and scale back some of that regulation and allow mergers that in the past were prohibited?
Well, we are looking at exactly this, and as I said, we certainly this direction of discussion is indeed that we need to allow European companies to scale up.
We often hear about the need for a capital union in the European Union. It's on everyone's list. It's the top of the line. It's incredibly difficult politically, isn't it? Is it actually realistic given the urgency of the moment? How do you look at it?
We certainly need to deliver on Capital Markets Union and on Savings and Investments Union. If we talk about Capital Markets Union, we are having more than 10 trillion euros of household savings in the EU. And the big question is how to put those household savings to the productive use to finance European economy, to finance European companies, and at the end of the day also to have a higher return for the savers on their savings, because we know that in a long term capital markets are actually producing better returns than bank deposits, but we do not have much of this retail capital markets culture. So therefore we are advancing Capital Markets Union as a matter of priority, and I would say politically it's not so difficult, because by and large everyone agrees with the Capital Markets Union and with its goals and the necessity. The devil is then often in detail on the specific files, and that's where we need to get progress.
There are holdouts, however, when you look at issues of a centralized regulation, tax issues. Are these not going to crop up again like they have in the past?
No, that's as I said, that while everyone seems to be agreeing with aim and necessity of capital markets union, devil is often in the detail, and that's what where we need to make this real progress.
So what's your assessment then? Are we going to get this 70%, we're going to get it, 30% we're not? What are you sort of looking at it as right now?
First of all, I would say we had been already making progress in previous years because we already had 2 capital markets union action plans which we have implemented, and many things have been done. So we are making progress, but what we are not really seeing is the increase of capital markets as a share of funding of European economy, because that's the ultimate indicator whether we're succeeding or not. So, and in a sense, something is still missing for us. Clearly seeing the structural break of share of the capital markets union in funding the economy to start to increase. So we need to keep working, and at some moment the structural break will come.
We're seeing right now that there is a lot more investment coming from outside the European Union into the European Union, a lot of private investment, a lot of interest. That must be good news for your job. Is that not a good thing to see this outside investment coming in?
Well, indeed, we now see stronger investor interest because indeed, in the current fragmented and geopolitical world, stability, respect for the rule of law, strong institutions, predictability, it all counts for something, and we see this investor interest, and we, in a sense, need to capitalize on this. But when you talk with investors, indeed you see that yes, investors are also diversifying more into Europe. It is happening, but they are also indicating that there are many homework still for Europe to do as regards competitiveness, as regards productivity, as regards reduction of administrative burdens. So there are many things we also need to do domestically still to leverage our strengths.
When we look at investment coming in, we're also interested in risk capital for startups. Is there any concern that too much of that is from outside Europe, especially when we look at strategic investments such as quantum computing, AI, robotics? How important is it that that becomes homegrown instead of outside?
When we discuss investment, like venture capital investment and so, I think it's positive to have also foreign investment coming in Europe supporting the startups. I think where the concern is eventually that many of those startups then go to scale up outside Europe.
Late-stage funding is hard to get in Europe, famously.
Exactly. So, therefore, if we have also more, but not only funding, but if we have more also foreign funding for scaling up in Europe, that's already a good thing. But also what many of those scale-ups then indicate is the issue of fragmentation in the EU, that we do not really have a single market, that there are still too many barriers, as shown also, by the way, by Draghi report, that they really still need to deal with 27 different sets of rules and regulations. And that's why they choose to go scaling up somewhere else. And that's also one of the reasons why we are currently working on so-called 28th regime for especially innovative companies, to have one European set of rules instead of 27 set of rules, which actually would allow companies better possibilities to scale up in Europe.
This would be in particular helpful for startups. This would be a voluntary opt-in kind of regime of rules. Is there any concern that that could be killed at the European parliamentary level, however, as sovereign concerns about regulations come in?
Well, we certainly are going to have this discussion. Currently, we are at the stage where at European Commission we are preparing a proposal, and next year we will be rolling out this proposal, and then indeed it will be in hands of co-legislators, but I hope that there will be appreciation also among co-legislators that we need to make progress, that it's important for our economy, it's important for our competitiveness. Well, as a positive sign, I could say that recently we received a letter from 19 member states calling on the European Commission actually to focus this work on competitiveness, to focus the work on simplification, reduction of administrative burdens. So we see that there is understanding and political demand for this.
You talk about competitiveness and reducing bureaucracy. Isn't bureaucracy sort of built into the EU in the way it's designed? Often these are about observing certain sovereign regulations. There are compromises that need to be made. How much concrete progress can the EU make? You have several programs underway, several efforts. What can you really hope to achieve, and what is just untouchable?
Well, we have set the goal of a reduction of administrative burden by 25% by the end of this mandate, and by 35% for SMEs, which would translate in a reduction of administrative burden by 37.5 billion euros by the end of current mandate. With the simplification proposals we have put forward so far, 6 omnibus proposals and some others, they would generate savings of 8.6 billion euros. So one can say we had made a strong start, but we need to continue at the same pace if we are to achieve our overall administrative burden reduction target. And what matters, obviously, at the end of the day is not what the Commission puts forward, but what comes out at the end of legislative process. So it's important that co-legislators, EU member states, Council and European Parliament are processing swiftly those simplification proposals.
I want to wrap up by asking, your job in many ways, to me, it seems that you need to focus on consolidation within a very fragmented collection of economies, essentially, whether it's capital markets unions, whether it's defense procurement. We're also living in a time where populism is growing and seems to be working in the other direction. Isn't this, despite the urgency of this great power competition, a very difficult time to urge more consolidation in the EU?
I think when we discuss about populism and so, it's also linked with the economic performance of the EU, with the perception of EU as being too bureaucratic and so. So in a sense, if we are delivering on this simplification agenda, if we are delivering our competitiveness agenda, if we improve therefore also our economic growth and so, this is already part of the response to this populism. So we need a strong economy.
Do you have that much time?
Well, indeed, and I would say there is this sense of urgency in both at the European Union level and also in member states. I already was mentioning this letter from 19 member states, which we just now received, reiterating the sense of urgency that we need to move forward fast with this competitiveness and simplification.
All right, Valdis Dombrovskis, thank you so much for your time.
Thank you.